Hi, everybody. Welcome to another monthly market outlook by Atlas Wealth Management. For more information on our services, please go to our website at atlasbuildswealth.com. We also have some articles, and you could also download a free retirement calculator.
Hi everybody, welcome to another market analysis video by Atlas Wealth Management. I'm Ron Lang. First we're going to be looking at the S&P 500. Well, we had a very interesting month in addition to a very interesting quarter, and we finished on an all-time closing high on the S&P 500, and we're closing in an all-time high at 1576. Certainly, we are, not just myself, but everybody's been looking for a 3-5% pullback in the market, and we were looking at around 1450 for that. Also, one of the things to consider is one thing that's trending higher, unfortunately, is negative guidance outlook for the next quarter for corporate earnings, and we'll know more about that over the next 3 to 4 weeks. That could be our catalyst and conviction to a pullback in the market, so we'll have to see. We had a very, very strong movement at the end of February through the end of March, and the further we get extended away from a lot of our moving averages, the quicker it's going to snap back. So one of the things that we're looking at here is we are looking for that pullback, probably to maybe not the 1450 level, but at least to the 1500 level before we take our next trek higher. Europe is one of the biggest concerns here. If they can't find any for growth, if they continue to have some banking issues, that's one of the things to look at as a catalyst for a pullback in the market. The other thing to look at here is the relative strength indicator. Back in late January and February, when we had a divergence in RSI to the market, we had a pullback. Well, we also have divergence here, a little bit sharper one in the RSI to the market. So we could be looking at even a steeper pullback than what we saw here from around that 1560 to the 1487 level. So we'll have to see what happens here over the next couple of weeks when earnings come out. So let's first start looking at Apple here. This is everybody's favorite whipping boy. It's amazing how things change. So we're looking at probably the pricing to stay between the 400 and the 450 level for a while, until we get a better chance to see what the next product cycle may look like. But obviously, as you can see here, it has been able to stay over that 50-day moving average. And we had talked about here that it needs to stay over for 3 days to try and get any type of breakaway power, but we didn't see any of that. So we'll have to keep an eye on Apple. ExxonMobil had a very good quarter. One of the things that we want to look at here with ExxonMobil is it able to break these highs here of 92 and 93? If it can, it has a chance to go higher here. But a lot of this kind of meandering here in price action shows that I think the waiting for corporate earnings, and that'll decide whether it's the next leg higher. Google went on a very, very nice run here in early March. It's pulling back. We're looking for it to pull back probably to the 776, 780 level, and then we're seeing if it could bounce, go higher. If not, it has a very interesting head and shoulders pattern forming here. Could be waiting for earnings there too. We'll have to see how that shapes out. Walmart had a very good month, trying to break new highs here at around that $78 level. We'll have to see where that goes. But it's on a very nice pattern here. Decent up volume. And again, with corporate earnings, we'll have to see what the next leg is there. With Microsoft, we had a very nice breakout here of this 28.29, 28.50 level. We'll have to see if this holds. The next big level for it to get through is this $29 level. If it gets through there, it has a chance to get higher up to that 30.50 target. So looking at GE, GE had some very mediocre price action. And you could see here it's just been struggling to find any footing to try and go higher. This is where it increased the dividend, had decent corporate earnings, but really hasn't done anything since. Bouncing off the 50-day, we'll have to see if it goes higher. But again, based upon this type of price action, we're waiting on corporate earnings there too. IBM had a terrific month in March, going from the 200 to $215 level, really pushing the Dow to all-time high since it makes up about 11% of its overall price action. So we'll have to see where it goes from here. But right now, it looks like that price is stabilizing. Chevron kind of peaked a little bit towards that 122 mark and pulled back. So this could be regaining some footing here at around 119 before it either bases, consolidates, or goes higher. So we'll have to see what that next catalyst is to bring that higher. AT&T has done pretty well considering from those January lows. It's been on a very nice trend, and as you can see here, it's starting to break out of this mini base here, headed towards that $38 level, which will be the next area of resistance. AT&T still paying a very nice dividend. People want to be in it. Price action fairly stable. We'll have to see the next leg up and what the catalyst is for that. Procter Gamble, as you can see, has held the price very, very well since that January run. It's consolidating, waiting for the next catalyst to see where it's going to go higher, trying to break out that $78 mark. One of the things that we might see here is a pullback to that $74, $73 level before it bounces higher. Coca-Cola. Coca-Cola has had price action all over the place over the last 12 months. But as you can see here from its February low, it has just been on a tear up to that 40.65 level. That could have been on rumors that possibly Buffett was interested in taking a larger stake in the company after its purchase of Hershey. We'll have to see its next step. Coke is owned by a lot of institutions because of its dividend and is a long-standing holding in Buffett's portfolio for many, many years. Home Depot has done very well over the last 12 to 18 months, and as you can see, even from the low of last May, it's been on a nice, steady, long-term trend. And Home Depot is poised to go higher as the housing market is recovering, but people are still putting a lot of money into their existing homes and doing home improvements. McDonald's has kind of struggled a little bit here. It came all the way back to the $84 level. Been on a nice run since last November, but trying to figure out if it can actually break out of the $100 range. It's trying to get back up to the highs where it was last year, early last year, late 11. It's waiting for the next catalyst to get higher. We'll have to see what corporate earnings brings to push it up a little bit higher. Caterpillar has certainly struggled here since the beginning of January. While everything has gone up, Caterpillar has gone down. So we'll have to see whether or not it will be able to sustain itself to the next level. The transportation is probably the best performing sector in the Dow in 2013.